Hello there, Maverick traders. This is Rob Reinold. It is July 18th. Tomorrow is monthly options expiration where we close up the books. So let's jump into it. In this session, we're going to go through the news of the day. We're going to take a look at the equity markets, and then we throw everything away and we rescore everything with a technical basis. That tells us where to be long, where to be short, where to be sideways. And then we're going to take a look at some of those trades, and I actually have one bull, one bear, one sideways for you today.
Disclaimer. This video was created for professional stock and option traders. Maverick Trading is a proprietary trading firm that employs professional traders around the world. Our traders trade firm capital and keep 70 to 80% of profits they generate. All trades and analysis in this video are for professional traders only. If you are interested in becoming a professional trader for Maverick, click the apply button in the video description. Let's break down what happened today.
We had a continuation of the sell-off from yesterday. As you can see, the Dow down 1.3%, S&P down 0.75%, the Q's down 0.7%. Look at the Russell, 1.9%. One of the things we've been talking about lately is that the high flyers were getting hit, but the rest of the market was actually rotating. So we've seen like some down days over the last couple of days, but when you take a look at the Russell, when you take a look at the equal weighted S&P, they were up. I mean, even yesterday, Dow was up like 2% when everything else looked down. Today was a broad sell-off. There was no rotation. So as you can see, the Russell got absolutely hit and hit really, really hard. If we take a look at the advanced decline line, it's also an ugly day, 80%. So basically 4 out of every 5 stocks went down today. This is a broad sell-off. However, we're still holding up pretty nicely here on how many stocks are above or below their 50-day moving average. If we take a look at the news today, we heard from the ECB last night, or early this morning, and they said they're going to hold rates, and they are discussing one more cut. Now, this is different than their projections because their projections had 2 or 3 cuts for the rest of this year. If you look at this, this is actually a little bit of tightening of the ECB's interest rate outlook. The euro went up on this news a little bit, and really there wasn't a whole lot of activity off of it. Really, this was a continuation of the sell-off from the other day. There's really nothing newsworthy about this. This is really a technical sell-off. So speaking of technicals, let's look at those technicals. And you can see that we had this breakout. We had a breakout. We had a run. We ran up to new highs. And we all know that how stocks work is that they run up and they base, they run up, they pull back. This is officially a pullback. So we got a gap down, closed on our low, gapped up, fell all the way down. I want to really focus on the bottom part of this candle. We know that when there's a pullback, we typically get to the 20-day moving average first, then we can get to some support and resistance lines, and then we get to the moving averages. So again, 20-day moving average, support resistance lines, 50-day moving average. There's going to be some support points in there. And it's very important for us to look and see what happens at these support points. We pulled back to the 20-day moving average, and we got a rally at the end of the day today. So we rallied a little bit into the close. I don't want to get optimistic here because this is a fat, ugly red candle. I am not trying to put a bow on this, but we do have to take a look at everything. Okay, at the end of the day, the buyers came in and took this thing off the bottom, and we closed above the 20-day moving average. If tomorrow is an up candle, this could be the start of a potential reversal. So again, we know how stocks move. They go up, they go down, and then they go up. Sometimes they base. We need to see a green candle tomorrow. At that point, I think you can start to look at that 20-period moving average and say, hey, it looks like that level is likely to hold. Of course, we could do anything. We could totally bounce for a day or two and then crash right below it. But technicals, we follow technicals, and we know that this is simply an odds game. When you do get a bounce, a reversal candle, and some continuation at these levels, is typically a good time to take some bullish bets. As you can see here, I am not bullish here on the very short term. On the very long term, this is a bull market. We get pullbacks, we get bases. Who cares about this move at this point? This is not a trend change at all at this point. Now this is the S&P. We need to come over here and take a look at the Qs, because the Qs are definitely showing us something different. I do want to point out this is 100 stocks. And these 100 stocks are highly correlated together, mostly technology, communication services. So look, they move together. There's not a diversification like there is in the S&P. But looking at the chart, we had this high, we had this little pullback, 3 days of choppy price action, gap down, close on the low, gap up, selling off. Okay, like I said, we could put a little lipstick on this candle and say, ooh, we got a little bit of a long lower shadow. Ultimately, we're looking at support all the way down here. We didn't quite get down there, but we have clearly broken through this last support level and the 20-day moving average. So the Nasdaq is definitely in more jeopardy. We're looking at the S&P. We're at a +2 on the S&P. On the Nasdaq, we're at like a 0 to a +1. It's above the 50, below the 20. This is falling. Really, this is about as neutral as it gets on Nasdaq-like stocks. Ultimately, the 50-day moving average, that's going to be the level of support that you want to look at. If it breaks through that, then we can say trend change. Watch out, more likely to go lower than to go higher. Let's just take a second and look at this heat map, and you can see it's ugly. Across the board, healthcare got creamed, financials got hit. But take a look at those little green areas. Nvidia, Broadcom, Meta, Tesla. And then take a look at stuff like Microsoft, only down 0.7. Look, I'm not trying to make this bullish rah-rah because I hate bullish rah-rah people. I am not that kind of person. But we have to admit it's a bull market. And every time we've had a sell-off that's been, panicky to some people, I've come on here and said, hey, look, we have to admit it's a bull market. Chill out. This is probably going to be short-term. We're probably going to go back up. At some point, I will be dead wrong, and there will be a trend change. But until that point, I'm going to be very happy that I was on the bull side making some good money on trades. We are backing down to a +2. If we get a bounce tomorrow, maybe that goes up to a +3, or maybe next week it goes up to a +3. But this is our first trend change in about 2 months to where we're now just slightly less bullish than we were before. Let's take a look at some potential trades. Now, I am purposely avoiding the large cap tech like the Nvidias, like the Microsofts, like the Broadcoms. Look, I said this about 2 weeks ago. I said they are likely going to underperform while this market broadens out. I think that is still likely. So I'm going to look elsewhere. And here's a place, this is in technology, but this is one of my favorite charts out there. This is Palantir Technologies, PLTR. And here's what I love is that at some point it tried to break out today. It looked really good for a breakout. And look at the last 4 candles. Remember, we've had some selling in the market in the last 3 candles. All of these candles are green, meaning by the end of the day, there was more buyers than sellers. Yes, it gapped down every day. Well, it gapped up today. But you can see here, this thing is still attracting buyers. I don't see any reason why it doesn't break out. I like 30 as a target. A 28-30 bull call spread is a very, very easy vertical spread to do. You could take a look at a short-term 26-29 diagonal call spread. That would be good for, you could even look to do this for tomorrow's expiration if there's any value left in those 29s. No reason to be super bullish. I'm just looking to have a move up to 30 over the next couple weeks. On the sideways front, here is Coinbase. Now, if you follow the cryptos had a nice run a couple of months ago, and then for the last 2 months, we've really just been going sideways, and then they looked like they were going to break down, and then they had a nice 20% rally off the bottom, but now they're kind of fading again. So here's Coinbase. You can see it's just trading in this range. And had a big down day today, so putting it right back in the middle of this range. We just have to decide where is the range going to be. Ultimately, you can see 260 to 200. This is the range. This is a very volatile stock, so you're going to get paid extra in the premiums. The big question is, where do you want the midpoint to be? Where do you want the expiration to be? So if you're looking to like next week, I would stick right in this 230 area. If you're looking for 2 weeks out, I actually want to go up a little more bullish, probably the 240 area where I'm doing something like a 220, 240, 260 butterfly. Slightly bullish to match my +2 in the markets. But just anything short term, I think you want to be right in this middle area of this range, which is the 230 area on Coinbase. So looking for some sideways stuff on Coinbase. And then on a short, I have been hunting this stock for well over a year, and every single time it pays me on the bear side. This is Walgreens. Had some big news that they're closing a bunch of their stores. Business is not going well. Had this gap. It fell. Here we have a bear rally. Again, this bear rally is from about 1070 up to 12. Just think, that is about a 12% rally. And again, it rallied on the down days, and you can see today, big fat red candle closing at its low. That's a nice confirmation. Look, I'm not going to get super bearish all the way down to 10, even though this is probably going there at some point in the next couple months. But I think an 11 option is really easy. I think an 11-12 bear call spread or bear put spread, I think that makes a lot of sense. You're going to get probably about 45 to 50 cents. That makes it about a 1-to-1 risk-reward ratio. Again, this one, every time it has a pop or a base or anything, I take another position in it, and it's been nice for the payoff. Let's talk about tomorrow. We are still more bearish than bullish. And until that changes, again, we need a reversal candle, and then we need a confirmation candle. So we are at least 2 days away from me being able to come out and say, technically speaking, that pullback is over. Again, we don't have any idea what's going to happen. It could just bounce for 2 days and then fall apart. And when I say it's over, it just falls apart and goes down. That's trading. We have no idea what's going to happen in the future, but we do know when things have pullbacks and we get a reversal candle, and we get a confirmation candle, typically that's a good time, odds-wise, to enter a trade. We do have Netflix earnings after the bell. The stock, when I put this together, was down about 1% after hours. We'll have to see what happens tomorrow. But if it's flat, I don't think there's going to be much pressure on the market whatsoever. It was down about 4% right after the bell, and I thought, oh, that's going to put a little bit more pressure on the futures. Right now, I'm thinking the futures are going to be, probably close to unchanged tomorrow morning, unless something happens overnight. No more economic reports for the week, and we have a couple of earnings reports on Friday morning, but that is about it. That's the Market Roundup. Thanks for joining me, and I'll see you tomorrow. Bye.